Another crypto domino is starting to fall. Today, it's Babel Finance has halted withdrawals under liquidity pressure. This comes just a few days after Celsius Network did the same thing, and there's a lot of chatter on Twitter about a hedge fund called Three Arrows that has a lot of outstanding loans that are backed by crypto collateral that are facing liquidation, and the end game remains Tether. That is the one that will break the camel's back, and Tether is under pressure today again. What's up, guys? I'm nobody special, and it is time to shrink my big melon of a head, and let's talk about what's going on in cryptocurrency. Now, it's very important to understand that what's happening right now is a failure of DeFi, or decentralized finance. Now, if you don't know what decentralized finance is, it's basically a bank. Okay, DeFi, think bank. What's going on right now is not a failure of Bitcoin, it's a failure of a bank. But in this case, it's DeFi, which is acting like a bank. Now, where traditional banks are run by these greedy, corrupt, globalist schmucks, DeFi, unfortunately, is run by amateurs and a-holes, and they do a lot of the same things wrong that the traditional banks do. They just do it while wearing a V-neck instead of wearing a suit. Now, all year we've been watching Fed rate hikes and interest rates rise. This has made debt risky, and what these DeFi apps do is they take crypto that's lent to them by customers. They promise these ridiculous returns, and then they take that crypto and they go out and they make even riskier bets. And right now, as debt becomes more and more risky, those loans are starting to fail. People are starting to withdraw their crypto as prices drop, and these firms don't have the cash to redeem these coins, and so they're halting withdrawals and they're going bankrupt one by one. Today, it's Babel Finance, and this is in CoinDesk just a few hours ago. Babel Finance suspends withdrawals citing unusual liquidity pressures, and they've responded to a market downturn by temporarily freezing withdrawals and redemptions, i.e., you can't have your money back if you lent it to them, at least not right now. Hong Kong-based crypto lender Babel Finance has suspended withdrawals and redemptions, according to an announcement on the company's website. They said Babel Finance is facing unusual liquidity pressures, the statement reads, before alluding to major fluctuations in the market and conductive risk events among institutional market participants. And at the end of 21, this company had outstanding loan balances of $3 billion. So what we're looking at right now is up to $3 billion worth of loans is going up in smoke. Now, Babel is not the first to go down. Earlier this week on Sunday, we had Celsius do the same thing. Now, Celsius is a much bigger outfit. Celsius had close to $12 billion on their books, so a much bigger outfit. But Babel is a smaller outfit, only about $3 billion in loans. But this is on top of what's happened at Celsius. And the next risk that people have been talking about, especially in Twitter, is this hedge fund called Three Arrows, or 3AC, you may see a lot of talk about. And here it is in Markets Insider. Three Arrows faces possible insolvency after unforeseen liquidations, according to a report. Dubai-based crypto fund Three Arrows Capital is facing possible insolvency after incurring at least $400 million in liquidations, the block reported on Wednesday. Three Arrows, popularly known as 3AC, was liquidated by crypto lending firms and is currently in the process of repaying lenders and other counterparties, according to the report. Now, 3AC right now has about $250 million in outstanding loans. On top of this $400 million, that's collateralized with Ethereum. Now, there's riders in these loans that says if Ethereum drops below $1,042, that collateral gets automatically liquidated and the loan's paid back. So that's important. There's almost $250 million of Ethereum sitting out there right now that's going to be auto-sold if the price drops a little bit. And I do mean a little bit because right now Ethereum is sitting at $1,081, just about $39 above that trigger price. And Ethereum has already shed a couple of grand in value over the last few months, falling big time from a high of over 4,000, now sitting just above that trigger point. So if that loan gets triggered, if the price drops below 1,042, there's going to be a big step change down in Ethereum's price as that $250 million in loans gets liquidated and all that Ethereum hits the market all at once. That's going to drag the whole cryptosphere, Bitcoin, Doge, all of them down, along with Ethereum. Again, what's happening in the crypto space is not a failure of Bitcoin. It's not even a failure of Ethereum. This is a failure of debt. The crypto space, because of this widespread DeFi phenomenon, has basically become an extension of the debt market. It's just a debt market that's run by even more corrupt and even less intelligent people than the traditional finance market. So this is not a condemnation of Bitcoin. I want to be very clear here. This is a condemnation of traditional finance and its greed infecting Bitcoin and polluting what it was meant to be. Bitcoin was never meant to become a bank. It was never meant to be used by banks. It was meant as an alternative to the banks and these DeFi apps like Celsius, like Babel, and these stable coins like Tether flies in the face of everything that Bitcoin stands for. It goes against Satoshi Nakamoto's original vision. And speaking of Tether, I just want to add here, Tether's USDT market cap dips below $70 billion for an 8-month low. We're now at about $17 billion worth of Tether has been redeemed, where the Tether has been surrendered back to the company in exchange for the dollar. And so far, Tether has been able to meet that $17 billion in redemptions. So far, they claim there's still another 69 some odd billion dollars out there, but we don't really know because Tether has been promising us an audit for years and they have not delivered on that audit. Only vaguely worded attestations promising us what they're holding. Nobody really knows what Tether has on its books, if anything. So at any given moment, the next Tether to be redeemed could be the last. It could be the one that breaks the company and Tether loses its peg. And this is the end game for crypto this time around. If there's one thing that is really going to tank the crypto market, I mean, it's already dropped almost 2/3 of its value. But if there's anything that's going to bring it down even harder, faster, it's going to be Tether blowing up. And as Babel and Celsius and Three Arrows, and as more names join this list, understand it adds pressure on Tether as it drives further redemptions. Now, my long-term price targets for Bitcoin remain unchanged. I still believe at the end of this decade, Bitcoin's going to be over $1 million, regardless of what happens with Tether. I've talked about that ad nauseum on this channel, but that does not mean I believe in Tether or that I think these guys aren't crooks. I've been saying since day one on this channel that Tether will bring down the crypto market by 50% overnight if and when it ever pops, and I believe we're getting closer to that. If Tether would just come out and release an audit by a reputable accounting firm, it would go a long way to stopping this panic in crypto markets. But right now, people are panicking because one by one, we see these DeFi firms failing and everybody is worried about Tether. Remember that when Paolo Arduino starts tweeting out that it's the fudsters that are causing problems. No, it's Paolo and his crooked business practices. So again, folks, I just want to reiterate what's happening right now is a failure of DeFi. This is not a failure of Bitcoin or a failure of Ethereum. I don't see any flaw in Satoshi Nakamoto's original vision. I continue to be bullish Bitcoin in the long run. I continue to buy a little bit of Bitcoin at a time on the regular. That's a 10-year time horizon. But in the short term, there is nothing good coming from the crypto space anytime soon. We are in crypto winter right now. And during crypto winter, these scams like Decentralized Finance, just like BitConnect, just like OneCoin, just like Mt. Gox in the previous cycles, when we go into crypto winter, all of these scam artists start to fail. We've seen this before, and we'll see it again. And there's two things in crypto that I have said over and over again on this channel. Number one, do not leave your coins on an exchange. Don't leave your coins in someone else's custody. I don't care what they're promising you as a return. You could end up like these Celsius or like these Babel customers, where someone else has the keys to your coins and they freeze withdrawals and you are SOL. And another thing I've said time and time again on this channel over and over again is that when someone promises you a risk-free 10, 15, 20% return, run. There is no such thing as a risk-free 15% return. And all these DeFi apps that have been doing this, and Matt Damon and his Fortune Favors the Brave commercials and all this other stuff, they've been selling you reckless debt that is incredibly high risk while not being honest and forthcoming with you about the risks of that debt. And that's why despite a lot of people, a lot of comments on this channel, and a lot of suggestions that I stake my crypto or that I put it on this platform and earn this good return, I have said the whole time since I started this channel that I don't touch these DeFi apps. I don't care what they promise. I don't trust them. And right now, they're starting to fail one by one. But my long-term horizon for Bitcoin remains unchanged. And if you want to know more about why I think that way, you can check out this video I did about the worst Bitcoin investor in history named Bob. Till next time, live small and dream big.